Welcome to our Q3 earnings presentation. Starting directly with the financial highlights, we can see that we have shown very strong revenue growth underscored by very strong organic growth and overall achieved a revenue growth of 80% in the third quarter, leaving us with 62.9 million euros, and also achieved a very strong Ebitda margin of 30%, leaving us with 90 million adjusted Ebitda. We achieved 41% organic growth, which is more than 50% of the overall revenue growth, and therefore have accelerated organic growth also in the third quarter, while we also executed in parallel one M&A transaction with the Smartware acquisition, which is a supply-side platform and allows publishers to monetize their in-game inventory. Looking now a little bit more in detail on both of our segments and what we have achieved in the third quarter. So we did a very big DLC for our oldest IP, Fiesta Online, which was the biggest update to date, which drove substantial revenues. Then also drove a big update in Trove for our console version, which was already available on PC, signed 2 new licenses, Fantasy Town, which we will launch next year, and also another license which is still in stealth mode, and then also celebrated the 13th anniversary of our Wizard 101 IP. Overall, 56% revenue growth of the game segment compared to a very strong last year already, so substantial growth. On the media side, we also drove further innovative solutions together with our recently acquired Beamray acquisition, where we actually also saw very strong results already with the first campaigns which we drove for several customers. And here we saw 50% higher results and better results than on other solutions. We also partnered with LiveRamp and Pixelate. LiveRamp, for example, is also a solution for the IDFA world, and Pixelate will also support us and help us to further decrease any fraudulent traffic. Then on the on-work side, we also onboarded further people to support the strong growth of the company. To just name a few, Stephanie as the SVP of Revenue, Curry as a VP of Marketing, and also Derek as a VP of our CTV platform. And then also looking at the Smartware acquisition, which we did in the third quarter, that is actually progressing extraordinarily well, very strong revenue synergies already. And overall, we saw a 105% revenue increase in the third quarter. Looking now into the summary of the annual financial performance, and here we see that on a last 12 months basis we have achieved 221 million in revenues and a 58 million adjusted EBITDA, and at the same point in time also increased the EBITDA margin from 21 to 23%, and expect here by end of the year to be well within our financial target on an annual basis of 25 to 30% EBITDA margin. Going now into the details of the third quarter revenue and EBITDA development. So on the left side, we see the group revenue, which we have increased from 35 to 63 million, which is an increase of 80%, and thereof 41% organic. While on the EBITDA side, we increased the EBITDA even stronger by 199%, so therefore from 6 to 19 million, and at the same point in time also increased the EBITDA margin from 18 to 30%. Due to economy of scale, fixed costs are relatively stable, while the revenues are scaling, and therefore EBITDA is growing much faster than the revenues. Looking now into the third quarter segment performance, and here we see on the game segment that we have shown very strong growth of 56% from 18 to 28 million revenues, and also very strong increase in EBITDA margin from 28 to 38%, which is due to the KingsIsle acquisition, but also further bigger DLCs which drove substantial revenue growth, as well as further in-game ad revenues, which then also paid into the 56% year-on-year growth. On the media side, we even grew faster with 105% in terms of revenues, increased the total revenues from 17 million to 35, and also increased the EBITDA margin from 18 to 24%, and increased the total EBITDA from 1 to 8 million, so substantial growth on the revenue side, and even stronger growth on the EBITDA. And that's also due to economy of scale. So we onboard a lot of new clients in the last quarters, which are now expanding their spend on the platform. And at the same point in time, also existing clients are scaling, and therefore we achieve a lot of economy of scale within our media segment. Looking now into our revenue diversification, and on the left side we see actually the group revenues, where 24% is coming from the MMO business, 14% is coming from advertisement, and 6% from PC and mobile casual games, while the majority of the revenues for the first time is actually coming from our AdTech media business, and thereof 79% coming from our supply-side platforms, 14% from our demand-side platforms, 6% and 1% from performance and influencer platforms, And these are actually the two things, performance and influencer, which we announced that we will close it down and expect the revenues to be close to zero within the fourth quarter, as the revenues are not as scalable like in the other parts of the company. So, for example, the supply and demand side platform, which is fully self-serve and software as a service driven, so highly scalable, margins are very high, and therefore, we rather close now the low margin business of the performance and influencer stuff. Coming now to the operating cash flow and Capex development, here we see that we have increased our operating cash flow substantially to 45 million, with a very strong free cash flow conversion of 34, which is achieved because we have a limited maintenance Capex of 11 million on a last 12 months basis. And actually that's achieved because we still do the further development of our IP-owned games, but don't develop a game fully new from the scratch. So we don't invest 5 to 50 million to develop an MMO game fully new and launch it then, because we think the risk is still too high, as the launch risk in the gaming industry is also quite high. Therefore, we rather license games, and that's actually also part of the expansion Capex. And here we see the KingsIsle and Smarto acquisition, which have led to a very strong increase in expansion Capex. But at the same point in time, we have also acquired new licenses and also new game IPs, and have announced already Fantasy Town, which is also ready to launch for next year. And there's also more to come. Looking now into our net leverage development, and here we see that we're coming from 7x in 2014 and have now traded down to 2 to 3 in the last 5 years, while we actually also taken now into account last 12 months Ebitda from Smarto and KingsIsle. Smarto's just here in for 1 month, for example, trading below 2.5, which is also well within our net leverage target of 2 to 3, and therefore we are also having a more conservative net leverage looking on our pro forma numbers. That brings us actually already to the end of the presentation and the outlook of the MGI Group. And here the guidance remains unchanged, and we still expect a very strong growth of 67 to 81% in terms of revenues, while we expect to be rather on the higher end of our revenue target. And in terms of the adjusted EBITDA, where we have communicated 65 to 70 million, which is 123 to 141%, which represents a much stronger growth than the revenue, so really reflecting also economy of scale. And here we also expect to be rather on the high end of our target than under-deliver. That brings us already to the end of our Q3 highlights, and I would like to thank everyone who were listening in, and keep in touch.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.